Hi, this is Sam, Gloriton Group financial analyst. Here's the broadcast of the crude oil and other commodities. I'll be here to share information with you every week. The oil dropped to a 6-month low on weak economic outlook, with the high U.S. supplies. Oil price rose slightly in Asia trade on Monday as data released last week showed some resilience in the U.S. economy. Although the traders were largely on edge before the strain of the central bank's meeting this week, most notably the Federal Reserve. The crude oil was nursing several straight weeks of the losses after disappointing production cut by the Organization of Petroleum Exporting Countries and their allies, while weak economic print from top importer China also raised concerns of their demand. But this was somewhat offset by the strong U.S. non-farm payrolls data on Friday, which present the labor market as among a few bright spots in the world's largest fuel consumers. While the reading diminished expectations for early interest rate cut by the Federal Reserve, it also spurred some optimism of the outlook for the crude demand, especially in the scenario of the soft landing for the U.S. economy. This notion was supported by the Department of Energy, saying it was wanted to buy up the 3 million barrels for oil to further refuel of the strategic petroleum reserve, which was drawn to a nearly 40 years low over the last year. The crude price found some support from the positive course, with Brent futures experiencing the value up to 0.5% at $76.29 a barrel, while the West Texas Intermediate crude futures rose about 0.4% to $71.39 a barrel by 20:01 Eastern Time. Both contracts have risen from the near 7-month low on Friday. The central banks, the key U.S. data on tap this week. Still, any major recovery in oil was limited before the strain of the key central banks meeting and the economic readings this week. The Fed is rarely expected to keep the rates on hold, but its outlook unplanned. The rate cut in 2024 will be closely watched following the recent signs of the labor market strains. So after the Federal meetings, the U.S. inflation data for November is also on tap this week. Beyond the Fed, interest rate decisions from the Bank of England, the European Central Bank, and the Swiss national banks are also due this week. So the global monetary conditions are likely to remain tight, while in 2024, limiting the economic growth and waiting on crude demand. This notion weighed heavily on oil through 2023, limiting any major upside from the several OPEC production cuts. Economic weakness in top oil exporter China has also been a major point of the contentions. Data last week showed that China's oil importers sank to the 4th-month low in November, amid high stockpiles and muted fuel demand. The PVC and other are mainly going balance oscillation in the short term, with the ally crude oil's great work in the last week. In terms of the price, the crude oil is still balancing after this meeting. So the market strategy is as following like this. Based on the situation, the international energy market will remain in the oscillation trend in the recent days. For the professional manufacturer, you can consider buying the stocks and inventories at a very low point. And for the import and export trade enterprise, our strategy is still conducting the market hedging and the selling and the buying at the lower point of those stocks. Does such a massive change have any impact on your industry? If you have any questions or ideas of the financial market, please feel free to contact us. I'm Sam, a financial analyst with the passion of quantum physics. Don't forget to follow me. Thank you.